So I even set this up, which is amazing. So welcome, Mark. I'm super stoked to have this weekly market update with you. I've been doing it. I've been going it alone for the past month.
I'm here.
And I was so glad when I was talking to you last week. I was like, let's do this together, and you were all over it. So let's dive into what's going on with the Austin, Texas real estate market. What do you say?
Let's do it. I know I'm seeing all the headlines out there.
Oh my gosh. Last week I made an announcement about the market and it totally caught fire.
Yeah, I mean, Ryan Sarhan picked it up, right?
Yeah, he must have been watching my channel because he also said that the housing transactions are on their way up and on their way down with the market. So it's pretty funny. So listen, prices are up and interest rates go up and down. I mean, it's the reality of the market, right?
Of course. I mean, it's the age-old saying, right? But at the same time, I mean, what I'm seeing around here in the DFW and from word on the street in Austin, I mean, transactions are still there, right? It's just finally there's inventory that buyers have to choose from, which is something that we haven't had the last 24 months, something I'm super grateful for.
Ditto, absolutely ditto. It's amazing when we look at what's been going on. So with that said, are you seeing mortgage applications go up or down before we jump into the market, or like what are you finding?
I am seeing applications they're very much moving with the news and the headlines, but this last week and a half or so, I've seen a slowdown. But I've had a lot of thoughts about it. I've had a lot of conversations about it. And I remembered, hey, school is starting this week. If anything moves real estate, it is our school schedule. And really when classes are starting, when classes are ending. And real estate is cyclical. And so we always see inventory pickup in April, May, June, July. And then we always see a reduction in inventory and a reduction in active buyers. But with that having been said, like out of the seven out of the 8 years I've been in the business, November, December have been the biggest months of my career.
Oh, wow.
And it's because there's the buyers that are out there looking, they're super motivated, or else they'd kind of be crazy looking at the holidays. And the sellers, like they need to move, right? And when sellers are needing to move for one reason or another, that's why they list their home. So that's what I'm seeing.
Yeah, well, I'll tell you what's going on in Austin. I pulled up some numbers and I've written down a bunch of things because there's a lot of stories going on. So when we look at this week's numbers, for starters, in Austin, we've got 9,281 homes for sale in Austin, which, as we've seen this kind of constant increase, this is our highest inventory number for the year. Super stoked about that because of those, 1,159 new listings came out just since last week, which is good news for buyers.
It's so much pent-up demand to sell. What people have just like not wanting to, they're like, oh, it's going to keep going up. It's going to keep going up. I want to wait. And it's like they needed to sell for one reason or another. And so it's exciting to see. I don't know if you actually took a look at it. I should have asked you to. Have you looked at, obviously, all of the headline reports and headlines coming from those reports? They're all looking year over year. And 2021 was the lowest inventory levels in the history of probably Austin. And so I would love to see what those look like. I mean, even 2020, but really 2019, like the year before the pandemic, the year when 2018 rates were up at like 4.875. And then 2019, they started coming down and it picked up before the pandemic even started on my end.
Yeah, listen, it's like you said, it's cyclical. And to go back at a point and to hear people talk about rates, I've heard a few people say rates are high, and I'm like, rates are just not as free as they were, for the last 2 years when the government was having everybody stay home. So we had no life, but money was cheap. So it's like, what are we going to do? now, we have a whole other thing going on with the economy and, what the Fed is doing, which I'd love to dive into because you are an economist when all is said and done, first and foremost, and you are a mortgage lender second.
I mean, I don't know that that's true anymore, but I did start with the economics background. Yeah, I mean, really, I keep thinking back to what you just said, which is all of the buyers and sellers looking at yesterday's rates as if they were cheap. But in reality, really, the only thing that matters is what are the rates that you're paying today, number one.
Yep.
But then what's actually inflation doing and what is inflation at the same time? And so right now we're arguably around 9% inflation. Rates are really kind of stuck in a range right now between 5.25 and 5.75. And so if you really think about it, rates are really cheap. If you're able to get a 30-year fixed mortgage for less than 6% and inflation is 9%, what point is there in doing anything in cash? You finance as much as you possibly can and then let your money do your work for you.
Yeah, we can dive into that strategy because so many people are of the mindset about, and we've talked about this ad nauseum, but there's this fallacy out there that you have to have 20% down. And it's not true. It's not true.
It's not only not true, it's counterproductive for most home buyers. I have to really shatter worldviews more often than not when I'm talking with a buyer that's more often than not, it's a move up buyer. And so they've got that money to set aside and put into the house. But the way that I really approach my business and with my clients is, number one, I want monthly affordability, and I need it to be determined by my client, not by me telling what's the maximum that they can get. Number two, I'm a naturally cost averse person. And so I'm always going to be trying to keep the cost down as low as possible, taking all of their money and putting it into their house. And so I need to make sure that we find the best financial solution for my client in getting them the house that they want, whether it's their dream house, whether it's their first house. We know those are not the same, but at the same time, everybody has the right strategy for them. They just need to figure out what that is and what that looks like.
Yeah. And you know what? And that conversation dovetails nicely into the big thing that I was diving into earlier today. So earlier this morning, when I was looking at numbers, we had 1,784 price decreases, and that was like closer to 10 o'clock this morning. But as about 5 o'clock this evening, that number jumped up to 872. 1,872. So we jumped up another 100 price decreases. So it's like the first thing I'm starting to think about is, okay, so we've got these price decreases. Now, last week we saw even more price decreases, but this week, when I'm looking at it, I'm like, okay, well, where are these price decreases happening and what kind of homes are we talking about? Because really, like, just saying a blanket statement to me is a bit ridiculous. But at the end of the day, what does it all mean, right? So I wrote down some notes, and this is really interesting, and I'd love your thoughts on this. So of the 1,872 price decreases, here's where they broke down. 828 of them were houses that were under $500,000. So from an affordability standpoint, that's basically almost half. That's like 47%, I think, of all of the houses. So then I thought, okay, well, where are people, not only when I look at the price point, but like when I think about families, because really mostly that's who I help, is I help families. So I looked at the numbers and I was like, okay, so I looked at the 500 to 750,000 range. 191 of the houses fit in there. And then between 750 and $1 million, there were another 358. And so when you think about that and those two numbers between the 500 and the 750, then really, like, that is a good chunk of the market right there. I don't even know what's 200 and 358. So let's call it 538 of those houses fell into that. And then when we look at the $1 million plus mark, that's where everything else fell in. So check this out. Between $1 million and $1.6 million, or $1 million and $1.5 million, there were 106 houses. Between $1.5 million and $2 million, there were 34 houses. And from 2 to 3 million, 85 houses. So when you add all of those up, you're looking at another 225 houses, all in the $1 million plus mark of those 18. So it's really interesting to kind of see where, the numbers play out for where those decreases are. And I don't know what you're seeing from an affordability standpoint, but when we're talking about the rates and we're talking about affordability, and we're talking about the inflation and the Fed and inflation, we're talking about mortgage rates, and now we're looking at price decreases, and then it's where those things all meet, right?
That's where supply and demand meets. That's where you can actually have a good market, like a market that we can all win in. The last 24 months, it's just been sellers winning. Like I literally, to get buyers under contract, like it was basically pull your pants down and say, like, what else do you want? And so it feels good to be able to send out competent, qualified buyers out in the market and know that they've got a serious opportunity to win an offer. And in reality, like you mentioned the economic side, like I look at all of the demographics and the data, and like I am most bullish on housing. There was a lot of speculative buying, that's for sure. Mm-hmm. A lot of that come down. Yep. At the same time, I've also seen more and more investors stepping in, and it's because they're able to actually come up with deals again. And so I think there's so much to say about that, but it's as you were running through those numbers, and I don't know the exact percentages that you outlined, but what that says to me is it's the lower income, middle income families, they're the ones that are getting priced out. Mm-hmm. And that's what's happening. And so if they're getting priced out, then those home value list prices that sellers were getting 6, 9, 12 months ago, mm-hmm. Buyers, there's not the same amount of pool of buyers. And so there's a lot less action. And so I think it makes sense. It's sad, and it's the last thing that we want for Austin. It's the last thing we want for Texas. It's the last thing we want for America is home unaffordability. But I think that's what we're seeing, because once you get into the double income, household income, 500K plus purchase prices, those families aren't as impacted with gas prices. They aren't as impacted with bacon being $30 a pound. And so it's taking a toll on the average American, and that's what's honestly the saddest part about it.
Yeah, I would agree with you 100% on that part, because affordability is very real. And and I had a comment today on my YouTube channel about affordability and what did I think was going on with tech, and with tech layoffs, which we'll see, is my thoughts. But Austin is a city not only built on tech. Tech is more recent than historical, and what we're seeing beyond the scope when it comes time to to business and our infrastructure, and who our big employers are beyond Tesla, beyond Apple and Samsung and Oracle and Apple, and who haven't I named, the Boring Company and the semiconductors and all the things. Those are all very real right now, and they've helped buoy our economy greatly, without a question. But we still have all the things like the post office and HEB and all these other, I'm trying to think of some of our other major players that are here in Austin. Schools, our government is here. So the Austin market as an economy is so solid. And I'd hate to say if history was any indicator, but if history is any indicator of what's happening in our marketplace, then Austin has historically been one of the last hit, and one of the most solvent economies that we've had. So I feel pretty good about Austin and what we've got going on as it relates to our economy. And so the question was asked is, what do I think is going on? And honestly, there's a so I don't know, like what are you seeing from an economic standpoint, and your thoughts on Austin as an economy as a whole?
So, I mean, in full transparency, I'm not in Austin, right? And I guess I want to just say that for the show and for the audience. I'm here up here in the Dallas Fort Worth Metroplex.
Yep.
From I guess the outside, geographically speaking, I work with a lot of buyers in the Austin area, and more so recently than ever, it's not necessarily downtown Austin, it's in the surrounding areas, right?
Yep.
I'm seeing, again, from the outside, but on the inside at the same time, the San Antonio to Austin Metroplex that is being constructed right now, that is where that is one of the best investments that somebody could make, because that is going to be its own DFW, and it's probably going to be bigger, and it's going to be one of the greatest mixed economies, mixed use land masses that we have in America. And so Austin's tough because Austin isn't that big, right? Like, we know big cities here in Dallas, and
Yeah.
we have a lot of land mass, and we just keep building. But downtown Austin, it's tough. Like, they're not making any more land down there.
Yeah, and we are seeing, like, as we go out and out and out, we're seeing so much action in Williamson County and Hayes County, and that growth as we go further and further along, because you can drive a half an hour south on the highway, and housing is way more affordable than it is, say, here in Austin. So if you're not C-suite in one of the bigger companies and you're still working at them, then you don't care about, we don't have high toll taxes, or like they do, in other places. Our toll roads are cheap here. And so even, and there is no toll road if you're going south. So it's just a straight shot, and it is so easy. And we are seeing the Austin MSA continuously expand. And so, while we're seeing all these price decreases, we still had 152 houses this week that saw a price increase. So it's not like I'm not shouting from the rooftops that anything is going on. I think it really is an effective consideration of where we are with the economy, and how overpriced some of those houses may have been, as people have had them on the market for a while, and they were looking at an upward trend that just couldn't continue, right?
Well, it's that. I mean, everybody is always talking about the list price and the asking price, and it's like, who's coming up with that? Is it the agent looking at the market and saying, this is your market value and this is what we think we should list? Or is it the seller saying, no, this is my number and I want to list here, and then not really doing anything to stage the property, to market the property? There's so many things that goes into selling a house. I know only a fraction of them on the lending side. But I mean, I see every single day, you can have basically two houses on the same street listed. One has been cleaned up a little bit and made ready to actually bring to market. The other is, let's say, a third-party company that's listing it, and they do nothing to stage it and to actually make it look good. And one of them goes off the market in a couple of days, and the other sits there. And so, like, there's so many different variables that we're looking at. It's really hard. Like, I'm a macro guy, but we've got micro markets within micro markets, and we have so many different variables that are moving this entire thing that it's impossible to just label everything as, oh, this is what's happening in Austin. It's like, well, what's happening in this zip code versus that zip code, and this neighborhood versus that neighborhood? Those are all much more in-depth conversations.
Totally. And you touched on something, and I don't know if you were trying to skate around it when you were talking about putting lipstick on something. But there's, listen, let's call it what it is. I mean, a $62 million lawsuit slapped on the wrist, which was, I think, barely a slap on the wrist for Big Eye. Pardon?
For them.
Yeah, for them. And, to see, I just honestly, I went through it last week and I was going to do a whole video on it. And I kind of begged off it, and I really did a pretty big deep dive. And at the end of the day, I can say a number of things, but number one is I really hope that of that $62 million that those disbursements happen, and that the people who were taken to the cleaners, if you will, get some of their money back, because it's unbelievable to see it. And the fact is that now all eyes are watching, and we'll see what happens. But the difference of putting lipstick on something versus really prepping it. And again, I am watching the market incessantly and seeing, what are those outliers that have been on the market, and what do you think all those outliers are when you look at any given neighborhood here in Austin, Texas, of what's just sitting on the market?
I mean, I can think of one company name in specific.
Go ahead.
I don't want to say it, but I mean, we all know it, right? I mean, Open Door is the only one that's really doing it still.
Yeah.
Like I don't know how much you read into the Zillow and Open Door kind of joint venture, I think, that they're starting. But honestly, I've been pissed off by the entire situation, like since it really got started in the market. I think it is our duty as Americans to really ensure that our local economy thrives.
Yep.
And I think whenever a homeowner chooses to work with a third-party company, whether it's Silicon Valley or whether it's Seattle, all of that money is leaving your economy. And so by continuing to sell to these companies and to these investors, we're only just ensuring our own demise as a local economy. And so there are so many different businesses that go into ensuring a successful real estate transaction. In my opinion, I only want to work with local vetted people that I know are going to continue to feed into our economy, not just extract out of it.
Absolutely. And that is why when with the advent of the iBuyer, listen, my company has an iBuying program that, I did the certification, and I've never once talked to anyone about it because it's not something that I feel good about as the iBuyer in general. And I do think it has its place. Like there's definitely a place for it. Because not everybody wants to have people coming through their house, and not everybody, and doing all of the thing and going out in public. And sometimes it makes sense to people. But when you look at the fees that these guys were charging, and what they would do, and how the premise of working with them was, and how they duped people, and it's
complete false advertising.
It completely. And with all the counts against them, it's not every day that the SEC goes across and tries to really put their foot down, but they did on this one. And for that, I'm thankful, because hopefully, like I said, it's going to change the way business is being done, and it's going to start being done, more belly to belly again, with the advent of having somebody who really does know your market, who is an expert, who can put your property out there and negotiate on your behalf. And so for that, I'm so thankful. And now to know that kind of like all eyes are watching,
right,
and what's going on, I really hope that this is the beginning of the end for that type of business model, so that the consumers really can get the best possible representation for them in the market.
I hate to burst your bubble. That's just total wishful thinking. These guys have bottomless pockets.
Right.
In reality, I'm surprised they're making this move now. Part of the reason why the tech sector has a hard time in inflationary times is because interest rates go up in inflationary times. The interest rate that a company is paying on finance money, that is the denominator of that company's value. And so as interest rates go up, that means the price of a stock or price of a tech company comes down, right? Like immediately. And so there's just so much that I could go into within that, but it's like, I don't know. I mean, it doesn't seem like it's the right time for them. At the same time, we've only seen more and more and more investor-owned properties and investor purchases. And what we're really seeing is what a lot of kind of conspiracy nuts talk about, which is turning us into a nation of renters, right? And so you see all of this smart money piling into real estate. You see the news talking about how it's the worst time to buy and confidence levels are at record lows or just relatively lower than they were before. And at the same time as all of that's happening, they just keep swooping in, picking up these properties, taking on this appreciation that's continuing, ensuring that they're literally hedging their own investments while they're doing it, right? Like they're removing future supply off the market. And so they're ensuring their investment and their highest return. And I can't hate the player, right? I don't hate the game. I love this game. Like real estate is what made me. But at the same time, it's like, it's on us to actually put our foot down and say enough is enough. And it's time for us to go out there and own the property ourselves, not let these hedge funds and companies take them all out from under our feet.
Yeah. And so, and now you're touching on the world of the BlackRocks and the Blackstones, and we're also moving into, what's being built. And I mean, in particular, this is the Austin weekly market update. So just focusing on Austin for a second, even with you in DFW and doing a lot of work here, the builders now are building more and more for these, rent to own to help the economy for those who cannot afford houses. And so not only are they building less homes for us to purchase as individuals, they're now building these communities. And to your point, is like we're starting to see them as if that is south. I don't know. We're starting to see more and more of these communities coming up. And whereas before, when they were in Houston, we thought, oh, they're in Houston. But now, like, they're being built in Austin too, these rent-to-own communities. So it's very real.
I mean, the bottom line is in America, we have a housing shortage.
Yep.
Like our rent prices are going up more or comparably to our home prices. And it's because we just simply don't have enough shelter. And so as much as I don't, and again, with understanding the economics behind building and a builder being a 100% for-profit business, has had their business profit eroded over the last 20 years, then seen a complete change in every. They've experienced, I know me personally, I've experienced homes appraising 20, 40, 50, 60, literally $100,000 over what buyers are buying for them. And they're a for-profit business. And so they need to get their profit, right? Like that is their responsibility to their shareholders. We can't blame them for it. And if you can build a 30-unit subdivision and sell it like that, like you can't blame them, right? Like the proposition's too good.
Absolutely. Absolutely. And so with that said, and we all know that builders represent their own best interest, and as they are a for-profit business, let's face it. But let's go back now with all that in mind and talk about like, where does that leave sellers now? Does it make it a better opportunity, even though we're seeing some of the prices come down? They're certainly not down anywhere below where they were last year. When I say they're down, and just to clarify that, they're down versus where their aspirational prices were, but they're certainly not down versus any other point in time this year. So if you're a seller right now and there's, 9,281 houses that are for sale, what are your thoughts on what you're seeing with the price points and the market just kind of hovering around, where it is and becoming more balanced?
I think we all just have such a short-term memory. I think we all just fail to remember that we had no inventory last August.
Yep.
And I had like 60 buyers that were pre-approved that were putting in amazing offers and stood no chance of winning them. And that's a depressing feeling.
Yep.
Like you've done all of this work, you're fully qualified, you actually put in a really good offer, and you don't even get a counter. Like that's deflating, right? And so right now I'm seeing buyers that aren't letting the headlines get in their way. They're actually allowing themselves to think analytically and looking at the things that we're talking about and looking at the reality, which is we're talking about shelter, and probably better to own that appreciating shelter than it is to rent it. And so we're seeing buyers that are ready and wish they bought a year ago and 9 months ago, but none of us have a time machine. And so they're going out there and they're still putting in good offers, but they're also getting things that they wouldn't have been able to dream about getting in March of this year. Like I've got 4 veterans under contract right now.
Oh, wow.
That wasn't 2 of them actually in Austin. Like that wasn't possible 6 months ago because their offers weren't even being looked at, never mind actually countered. And so there, with any change, there's winners, there's losers. I think right now, because I work primarily with the average Americans, I'm not working with the ultra wealthy. Honestly, I don't really want to. Like they're the ones that are finally winning. Like I think at the time the small guy gets a chance to win again. It's been far too long.
Yeah, I think, and what's interesting now is when you say the small guy wins, what I'm seeing is the small guy is the buyer and the small guy is the seller. And both of them are winning because the price points on, like I said, the price points on houses where they are now versus where they were a year ago or 2 years ago, we're head and shoulders above. I mean, we still have some zip codes that when I looked at the July numbers, we're still up 50% year over year. And so now with the advent of, having these 9,281 houses on the market, it means that even for sellers who are selling well above where they would have or could have sold, had we not had the pandy and then this, this buildup of demand, the buyers are also now finding that we're getting back into a market where we can do a little bit of negotiation. And that has been really valuable space to enter because now there's a little bit more choice and we're back to negotiating, which before, like you said, your terms, like, drop your pants. And what else? Like, I mean, I heard of like a guy who was like a bike manufacturer. He was like throwing in a new bike and, like all the things, like it was what can you do? And, paying for the seller to live in their house at no charge for, a certain amount of time and paying different fees for closing costs and things like that. And now we're seeing the reverse. Oops. And we're going back to a time where you're starting to see sellers come to the table a little bit more, and a house that is listed for a certain price point, if it's priced well, you can still be in a bidding war in Austin, Texas, but you're seeing a lot more of, the house price and being closer to the sold number, even with way more days on market than we've been in the past.
In the right neighborhood, they're in listed at the right price and not lipstick on a pig, like it's gone. Like it still doesn't make it more than a day.
Right. Yep. We're seeing that too. Like I said, we are still very much a town of pent up demand, and we have more buyers than sellers. And it's so nice to be again in a space where there is no market crash. I can't do one of those, fun things where it says market crash on my on my social media because it's just not true and it's clickbaity and all the things. But we with the increase in the inventory and some flexibility between buyers and sellers, we are really back down to a part where it comes time to having a good negotiator working in your corner when you are a buyer and an amazing marketer and negotiator when you're a seller. It's just the reality of the market. And that is a breath of fresh air, because that means that people are actually coming to do business instead of, begging and hoping
so much
that there are
harder.
50 people that, that can get to sleep in that house that night.
All I hear in these realtor like Facebook groups that I'm a part of is like, it's so hard to be a realtor. It's like, you mean you have to be good at your job and actually do it and actually market properties? You don't just list it and then you get it sold. Like, you actually have to do some work. It's so, it drives me nuts. But like, so we started this year with more licensed real estate agents in America than we had properties listed for sale. My only hope is by the end of this year, we have more listings than we have real estate agents licensed. I think that would be the best thing for America.
Well, let's see what happens. Let's keep watching those numbers and see what happens. And in all fairness, though, being a realtor has not been easy in the past 24 months. Now, I'm not saying it hasn't been easy on the listing side, but on the buying side, how many agents and clients bid and bid and bid and did not get the house of their dreams at that time? So it has been really, really hard and my heart goes out to all the buyers who bid and bid and bid and did not get the house of their dreams, even with their best foot forward, because there was always that one person who was like, who could throw money at it and didn't care if it appraised and didn't care what it did to throw off the numbers. All they cared about was getting a house for their family. And to them, I applaud them because they had the means to do it. So there are a lot of realtors who have worked tirelessly on behalf of their clients, who really took it on the chin because they watched their clients just not be able to get a house. And that is heartbreaking.
It is.
That's heartbreaking.
Yeah. Especially when, you couldn't pay me 9% to be a realtor. The amount of times I've said that, like, I will gladly take much lower commission for what I do to be a loan officer, because I don't know how y'all do what you do. Like, I don't like driving around for work. I don't like being stuck in traffic. I don't like going to see a bunch of houses. And I definitely I can't imagine the amount of time and effort it takes to get these offers in the back of your mind, knowing like, I probably won't win anyway. Like, I don't know that I could do that. And so I say what I said earlier with the listings and the agents with kind of tongue in cheek, but it has not been easy. But real estate is the biggest investment and liability of people's lives. It shouldn't be easy, right? Like, we need to be great at what we do in order to allow consumers to feel comfortable working with us in their biggest transaction of their life.
Yeah, and to that point, easy is one of those buttons that you hit. That was easy. That was easy. I'm going to flip it on its head and say it shouldn't, or not I shouldn't, but I wish it wasn't as difficult as it is sometimes, versus it should be easy. Because to your point earlier, affordability and housing and the American dream, right? And how we have historically created wealth and generational wealth is through real estate. I mean, period, full stop, right? So that this current time is, all I can say is I believe it is easier in some senses, and with rates, being higher for others now, it's harder. So what was easier? What was harder? I don't know. It's a word. And at the end of the day, affordability needs to marry up with expectation and what you can get for your money versus what you wish you could get for your money. And I think that's the thing that we need to look at. And again, going back to, those numbers and, and people who could at one point afford a house over $750,000 now reconsidering buying a house that maybe isn't as much house doesn't mean they can't buy a house. It just means that for a minute they may have lunchbox letdown, right?
Right.
And it's a realignment of expectation. And I want everybody to get what they want. I do. We all want to get what we want, right? Like, since the time we were little kids, we got told the story of the fairy princess or whatever it is, but we all want that slipper. We all want that prince. We all want, insert what the wanting and the expectation in America of like that, oh, well, we deserve it, right? Because I deserve it. So part of that in today's economy is like, let's make sure we can eat and put gas in our car and get our kids to school and clothes on their back and the dog fed and all and like all of the things. And we just may need to readjust our expectations on what we can get.
And that's not an easy thing to do, right?
No.
Never mind like physically and personally, but it's also like all of our expectations are changing and like have continued to like every 3 months, every 6 months. Like what we're really experiencing is an across the board not affordability. I mean, it's really an affordability crunch, but it's caused by the cost of living just going up across the board. And so we need to realign and reset our expectations of what our cost of living actually is around here. Because I can tell you, me being the transplant from out of the state, I came here in 2018 and I was looking around and I was like, I got an exponentially better lifestyle with exponentially lower cost of living. That's very quickly picked right up to where it was when I from the East Coast.
Yep.
And so the country, they're already used to.
We lost you there for a second, Mark. Sorry. What were you saying?
So we're just not used to cost of living being nearly as high as it is here in Texas. Everywhere else in the country outside, on each coast, everybody is used to home ownership and cost of living being on borderline unaffordable.
Yeah.
It's not that our prices are going to come down. It's our expectations are actually just going to rise.
Yeah.
And it's because we can't stop what's going on. We have a massive supply and demand mismatch. And home prices are going to keep going up. They're not going to go up at the uncomprehensible, just straight up stupid rates that they were going up at. But they're going to go up at least 5 to 8%. That is, if you look back at history, I think the median appreciation rates are 4.8, right under 5%. And so literally it's just, we're going to continue to see what we've seen, which is home prices continuing to go up. And in reality, the sooner that we can ensure that we're in a place where we can take advantage of home ownership, that's when you need to do it, is when you can, because you don't. I've seen nobody win from waiting.
Yeah, and so let's wrap it up with this then. And this is my take. I really feel like if we are looking at a price, and if that is this type of numbers that we are looking at, then that stabilizing is an opportunity for people to jump in and maybe not create the amount of earnings that they have, over the last year or 2 years, seeing houses, prices increase from 25 to 30 to 40 to 50+%. Year over year or over 2 years even. But there's no data to support anything as it relates to a market crash. It drives me mentaler that people are saying and using that word, because it's just this savage fear mongering that is blowing my mind, especially here in Austin, Texas. We have pent up buyer demand. We have sellers that are selling every single day. We have the companies still here that are here, and the Canva and the Google and the Oracle and the Samsung and the Gigafactory and SpaceX and Tesla. And they're making, there continue to be job announcements Are they, are some of those companies maybe slowing down and not hiring? Absolutely. Does that happen pretty much every year, starting in Q4? Yeah. So will we be surprised? Not really, but they're also continuing to make big announcements. So our housing market in Austin, as far as I'm concerned, and yes, I'm a realtor and I get that. It's kind of my job to say everything's okay. I just have no data to support anything other than, to your point, a stability, and the numbers are the numbers. What do you think?
I think the opportunity in front of buyers is massive because, I mean, let's look at it. Let's look at it conservatively, right? Let's say somebody buys a $550,000 home
Hmm.
and it goes up at 4% per year. Let's just say that first year, that home value wealth creation made for that family is $22,000. Can you save $22,000 just
Just by waking up in the
the
morning?
next 12 years? Just, yeah.
I think a lot of people cannot.
I don't think I can. And I make good money. And so in reality, that's 4%, right? Like your market is going to outperform that
Hmm.
more often than not right now.
Yep.
And so it's crazy to see. It's not crazy to see the headlines because I've known we've been living in a clickbait world for a long time. What's crazy to me is how many people are actually paying attention to it and are actually being influenced by it.
Yeah. Yeah.
I,
Well, we're lucky.
it surprises me because I'm looking at the numbers and the data and yes, boots on the ground. None of it makes sense. Like the numbers don't add up.
Well, Mark, thanks for your time today. Let's end it there. I think we've covered up a lot. I'll be really interested in, hearing comments. If you made it this far, thanks for hanging in. We went the distance today. This was fun. I'm really glad we did it, Mark.
Yeah.
Yeah, and I didn't even actually introduce you at the beginning of the show. We just kind of jumped in. So, for those who don't know Mark, tell them who you are, Mark. Let's end it.
Mark Karetskiy. I am a believer. I'm an immigrant myself. I was born in Russia. I truly believe in home ownership and the American dream. I absolutely love doing what I do, work with Movement Mortgage. We specialize in helping people purchase. That's really where my passion and really mission come from.
Yep.
I saw my parents buy their first home, literally took me out of the inner city, literally changed my entire trajectory of my life. And this was back in 08, actually it was 2010. They sold their house. The Northeast was hit a lot harder by the 2008 recession. They still walked away with 60 grand. And 23 years since moving to America, they're currently living comfortably. My dad literally just retired this year. And they were able to use their home equity to secure their Texas home for when they move here in the next couple of years. None of that happens without that first house. And that's really where my passion for all this comes in. And that's why I love working with first-time home buyers. I love working with our nation's veterans and with our active duty. And at the same time, I'm a kind of a numbers and a nerd with mortgage structuring. And so I always love working with move-up buyers. I don't know if anybody needs to tell you, but life happens. I love being able to take a look at what we have, what we want, and really figuring out the right path to get there. And so that's kind of who I am in a nutshell.
Awesome. Well, thank you. And thanks for joining us today. And again, Mark and I would love any comments that you have. Please comment in the space below. And thank you so much for tuning in to this week's market update. I'm Jennifer S. Goodman, realtor living in Austin, Texas. Thanks so much for tuning in. Mark and I will catch you next week.